Major markets at new highs to start the week. Even the Dow, which marked its first record close in almost 4 months. Is this a breakout or a fake out? Pete.
Well, it certainly feels like a breakout, and part of the reason I say that, Mel, is when I look at the options world, we saw nothing but huge buying right now. And we've seen it kind of moving in towards this in energy, in some of the financials, but today it was the emerging markets. So the idea, and Dan and I talked about this months ago, but this was huge paper today. They were buying the EEM, 250,000 in a single print. And they were looking at other 30,000 here, 30,000 there. FXI, the same sort of story. So it seems like everybody's at least playing for a breakout. So that's what we're seeing right now. Volatility shocked me today, by the way. It's still trading right underneath 13, like 12.5, 1280, somewhere in that range. It's amazing to me with the market that we've got right now that people are feeling so comfortable, maybe too comfortable right now.
So comfortable in a risk-on sort of mentality.
I'm never comfortable. So this is what's the title of this game? Breakout or fake out?
That's the title.
Yes.
Yeah.
Breakout.
Do you believe in this rally?
Yeah, well, you have to believe the S&P 500 is making a new high seemingly every day. It's not backed up by the transports, which topped out in September of 2018, the Russell in July of 2018, but the S&P is absolutely breaking out. You mentioned Mr. Buffett has $122 billion sitting around. We'll talk about that later, but one of his big metrics, the one thing that he looks at and makes decisions on, is basically market cap of the broader market over GDP, and that's at levels we haven't seen since 2008, 2009. And to Pete's point, a VIX at 12.5 in the environment we find ourselves in makes no sense. All that said, the S&P goes higher every day, so by definition, it is a breakout. Why are you looking at me funny?
Do you believe
long pause there.
Doesn't matter if I believe it. I know I haven't believed it. I haven't believed it for a while, but it doesn't. You know what I believe and what's reality are two different things. You know, I don't believe we should be here, but we are. So you have to make decisions based on where we are, not where I think we should be.
I don't know, financials, industrials, energy, materials, bond sell-off. I mean, all these things point to good things for the market.
And I don't think you need to have financials or transports breaking out to all-time highs. How about breaking out of the range that they were in? And that's absolutely what they've done. If you look at the semis, which is the place, the easiest, it's the easiest opportunity to attach yourself to the rally and say, hey, look, semis, no matter where you're looking at the period from, I realize it's been a sloppy way of getting there, but you're up 22% from roughly that blow-off high that we had back last year, which means you've had plenty of opportunity to sell them. And if you'd stayed in that trade the whole time, I think you're doing well. But Pete talked about the emerging markets. It's very important to point out, I actually think we're getting, and we've been easing into this move where we're getting into a secular dollar weak period, which is going to be very beneficial to emerging markets. And the outperformance that we've seen in Brazil and even Russia over the last couple of days is very important, and it's very important to energy. And at times, well, with the Saudi Aramco IPO news and everything else you're hearing. But if you look at this market, to me, the thing that is exciting about this move is not only have you had the Fed come and go and tell you they're out of the way, you've had a payroll number which reinforces that the consumer's alive and well. You've gotten through third quarter where no one's really said that the fourth quarter looks that awful. They haven't told you it looks good. And I think you have breadth in the market, which I'm waiting for Dan to push back on because he will. But the bottom line is I think if you look at the industrials, you look at the semis, you look at small caps, you look at financials, you look at banks, they're the same thing. They're giving it all to you. Go, Dan.
Well, I mean, maybe they are. You could have said the exact same thing when the market made a high in July, a new high that was an incremental high over the prior high. And, you know, the VIX was at just below 13. It looked like we were optimistic about some trade stuff. You know, bond yields stopped crashing and they're at a Goldilocks. So, I mean, we've said this, you know, every 3 or 4 months over the last year and a half. I mean, it's fine. And
but semis are 20% higher.
That's fine. But here's the thing. So I agree that semis act great, and they've been making lots of new highs, and they've been outperforming the S&P, and so is MAGA, Microsoft, Apple, Google, and Amazon. Okay. But at the end of the day, yes, there were some good new highs in the NYSE today that's showing this broadening out of this rally. But it's important to remember that we are literally just 4.5% over the October 2018 all-time high, which was an incremental high to the January 2018 high. We're just 2.5% from the prior. My point is we make these incremental highs and we sell off, right? We've had some good sell-offs. Now, that being said, there's been some great trading opportunities when we get these sell-offs. You know, we've had 7-8% sell-offs, and you buy them, we make a new high. I just don't think you buy new highs. The only difference I would say right here is that we are heading into the end of the year, and it may not make a heck of a lot of sense to sell anything at this point because you might get that move that just goes higher.
I think the impressive part of what we've seen, though, Dan, is we started earnings season, right? 70% of them are beats. And you start looking at some of these numbers and you're like, wow, some of them have given pretty good guidance even. So when we say, well, we don't really know what's coming up next, well, we've gotten good guidance from quite a few different companies so far. So it's interesting to me to watch this whole thing as there's a much more positive sentiment, I'm seeing at least, through the earnings season than I ever would have expected when we went into the earnings season.
We have seen that, though, Pete. If you look at the end of April, when we were in the, like, just the bulk of Q1 earnings season, we saw a new high in the S&P 500. Then we saw it again the last week of July. It was the same commentary. It was that trade fears were going to abate and the Fed wasn't going to screw things up. That's exactly where we are right now. And if you're telling me that you think the Fed may not screw things up, then you have not been paying attention over the last 15 years, correct, Guy? Yeah, and if you think that the trade issue is solved, then you've not been paying attention to the last 2 years.
And then have at it, except for the fact that the Fed is at this point gotten the market pretty straight on what they want to do, which is they're not going to hike. Right. We've taken two cuts off the table for December and January. They're not hiking anytime soon.
They're not going to do anything.
You guys make it sound like the Fed has control over this. Hold on, Tim. 1 second. Okay. The Fed has lowered interest rates 3 times since July. What did we see the 10-year Treasury yield do? We saw it got cut in half in a year. The market will move the way the market's going to move. This is a massive, massive market. So the way I see it is, if you're relying on the Fed to get things right and to kind of like point the direction in which yields are going, then I think you haven't been paying attention.
Okay, so I'm not sure what you just said. What I'll tell you is no one's relied on the Fed. I think we've all been appropriately critical of Fed and monetary policy being the panacea for anything. In fact, if anything, they're starting to get the sense that people are looking to fiscal policy to be the answer. I do think that yields have probably hit some bottom, but more importantly, we're addressing company fundamentals. And we know, and this happened, I think, in the first couple quarters of 2016. Everybody assumed we were careening off the road into a recession. We're not going into a recession. We're going to get GDP in a couple days. Granted, it's third quarter GDP, it's backward looking, but we're going to see we're at 2%. We're nowhere near careening off a cliff. And if you look at banks, they behave that way. If you look at industrials, they behave that way. And by the way, we now have mega cap. Hold on. We've got Google, we've got Amazon, we've got Apple, we've got the biggest companies in the world joining in the companies you said would never participate, which actually are doing something in terms of banks, small caps, and industrials. That to me is a pretty good formula.
When the banks make new highs. Okay.
Who cares about all-time highs?
I care about really matters when you're talking about breadth and when you're talking about how a market is where it is, how it actually has another leg of a market.
They have.
Can I interrupt here?
Well, you run the show.
Yeah, it's your show.
I was going to say, Guy.
Yes, Melissa.
When you say price is truth.
That's why when I say price is truth, people get mad at me.
Right.
But all the information that you can take in,
right.
The thing you base your decisions on are where things are trading.
Going, yeah.
The decision to buy or sell Apple at 257 is much different if it were trading 185. So when I say that, that's what I mean. The end decision is made based on where things are trading. So here we are at the S&P 500 at all-time highs. It's hard for me to say it's not breaking out. It's clear as day that it's breaking out to the upside.
Even though many fibers in your being
for the last
hold on. Don't talk about fiber in his being.
Yeah, that's a good point. Thank you,
sorry.
Right. Because that's a good point.
That's an excellent point by Tim.
Even though when you look at what is happening, valuations in the market, the fundamentals of the market, you don't necessarily want to believe the rally.
But you have to believe it.
But you are.
Yeah, I mean, it's the old thing. The market can stay irrational longer than you can stay solvent. And you can argue whether or not it's rational or not. It's not the point. We started it with Mr. Buffett's $122 billion cash hoard, and we'll talk about why he has that. And the point I made earlier is the one metric that he uses to look at the market, whether it's overbought, oversold, is absolutely, by any definition, at 146% market cap to GDP is flashing red.